Ratings agency Moody's affirmed South Africa's government bond long and short-term ratings and assigned a negative outlook. The investment-grade credit rating affirmation marks an end to the review period that started on 8 March 2016 when Moody's placed the country's ratings under review for possible downgrade. Moody's noted that South Africa is approaching a turning point after several years of falling growth and that the 2016-2017 budget and medium-term fiscal strategy will likely stabilise and eventually reduce general government debt. The agency, in its assessment, commends the country's adoption of more aggressive consolidation measures in the 2016 budget. It notes that the recent political developments, while disruptive, are testament to South Africa's institutional strength.
Our economy, which is currently at its slowest growth path since the 2008 world economic crisis, can and will be fixed. We will, however, need to continue pulling in the same direction to weather the storm. We've crossed the Moody's bridge. We are waiting now for S&P and Fitch. We are very confident that with the measures that have been put in place, we have to avert that possible downgrade. So we're not envisaging that.
Let's get more now from Sumitra Naidu, who joins us live from Johannesburg. So Sumitra, South Africa has received some breathing space from Moody's, but are the reasons considered by Moody's likely to hold with S&P and Fitch when they release their ratings next month?
Well, that's right, Panina. The reasons by each of the agencies were pretty much the same: lift economic growth, reduce debt and create jobs. There were a number of issues hampering the improvement: policy uncertainty, labor disputes, and one of the main worries for the agencies was the electricity supply shortage. But it's been 6 months since the power shortage has somewhat stabilized, some stability restored to Eskom and to the other state-owned enterprises that have been draining the fiscus. The likes of Eskom and SAA are still being handled by the Deputy President and the Finance Minister. The fiasco over the sacking of the Finance Minister in December last year and the reappointing of Pravin Gordhan has also restored some confidence. However, there's still work to do in terms of reducing debt and unemployment. We had some jobs data out today showing unemployment rising significantly in the first quarter of this year. We're now close to 27%, that unemployment rate from 25%, not a good sign. Also, economic growth forecasts remain below 1% for this year, and the current account deficit, which was another big concern for the ratings agencies, is still widening. So it's still all looking a bit grim. But the Finance Minister is planning to meet with both Fitch and Standard & Poor's in the hope of stalling any move towards a downgrade. We'll have to wait and see, I suppose, once that meeting takes place.
Yeah, but there was a caveat, Sumitra. A downgrade will be implemented if the economy does not grow faster and if government debt does not stabilize, among other factors which you mentioned for us. So what measures has the government taken to meet especially those two things?
Well, so far we've seen the Finance Ministry looking at ways of tightening up the budget. Spending was subdued in this year's budget allocations. There's been aggressive moves to stabilize the state-owned enterprises, which have been a real drain on the fiscus. It seems the war room set up last year to deal with these struggling entities has helped somewhat. Apart from guarantees and loans already secured for Eskom, the other entities like South African Airways is no longer receiving any cash injections, and moves to save the airline money are afoot. In terms of the National Development Plan, which really is the answer to lifting economic growth in this country and addressing unemployment, more needs to be done here. We need to see more aggressive implementation. The agencies also suggested more labor flexibility and less red tape, making a note of South Africa's low ranking in relation to ease of doing business. Government is trying to address these concerns, but again, there's loads of work to be done in this region. It will be interesting to see if the Finance Minister is able to convince the agencies to hold off on a downgrade. When you speak to investment houses and fund managers, a downgrade has already been priced in.
Well, some analysts, though, argue, Sumitra, that Moody's has usually been so optimistic about South Africa. Is that the case, really?
Well, yeah. you know, I suppose it is a sign of optimism, but these are meant to be very calculated moves by the ratings agencies. And if the figures don't add up, that's essentially what informs their decisions. Many could also see it as optimism because Moody still has South Africa 2 notches above junk, while Fitch and Standard & Poor's has South Africa just 1 notch above below investment grade. But Moody's is known to be quite aggressive with its moves, whether up or down. And this was the big worry here. Many thought that South Africa would suffer 2 notches by Moody's in one go.
Now, President Zuma just met with businessmen this evening. What are the highlights of this meeting, bearing in mind that the political developments are key to the rating agencies?
Well, that meeting is still underway, so no detail coming through just yet. But yes, it's a very important meeting, and we do know that there's been several meetings between President Jacob Zuma and business leaders in recent months. Government has been rather tight-lipped on the details of those meetings, but a few businessmen did come out. A few businessmen that attended those meetings said they were very encouraged by the president's renewed interest in working with business to improve the economy. You know, there was a big disparity between the two. There was, they just weren't working together, and that was seen as a huge problem for the economy. So there's been lots of discussion around public-private partnerships since then, talk of CEOs coming in from the private sector to assist government with running state-owned entities and help with other sectors of government. So there is a lot of movement happening on the ground. We're not getting much detail from there. Hopefully from this report and, from tonight's meeting, we'd probably get more details there in the coming months, in the coming days. And of course, just what is the way forward? Because now there is, I think government has realized there's a more urgent need to fix these problems to lift economic growth.
All right, Sumitra, I appreciate these insights very much. Sumitra and I do live for us there in Johannesburg.